Hello, and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today, and my name is Yongshen. With me here today is my colleague, William, our product specialist from Phillip Capital. How are you doing today, William?
Very good. Thank you. Yes, sir.
Yeah, I'm doing well as well. Okay, so for today's podcast, we will be discussing on the topic, are REITs a good investment in high interest era? So to our audiences out there who are currently investing in REITs, do not miss out this podcast. So once again, I would like the help of all of our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. And without further ado, let's jump into our topic for today. Are REITs a good investment in high interest era? So real estate investment trusts historically have delivered competitive total returns based on high steady dividend income and also long-term capital appreciation. However, REIT seems to lose its shine in the current high interest era. Should investors pay attention or stay away from REITs now? So my first question to you, William. So what is actually happening to the decline value in Q3 rate, but analysts has a positive outlook?
Okay. I think the main reason for the drop in share price of the REITs is due to very high fixed deposit rate offered by the bank. Okay. So put in this way, if fixed deposit is giving you a return of 4 to 5% with no volatility on your capital, meaning you put your money in the bank and you won't lose your capital at all. Okay. Versus if you put your money, you park your money in the REITs, okay, the dividend yield provided by the REITs is more or less the same like the fixed deposit of 4 to 5%. Okay, the return is about the same of the interest, but you need to go through the ups and downs of the REITs. Okay, which means 12 months later, there is no guarantee that your capital will be the same. Okay, there is no guarantee, and your return will be exactly similar like you put your money in the bank. Okay, so this particular reason, I think, is the reason why REITs is not so performing lately, because the bank offer a better return, just doing nothing. Okay, so in the past, right, all this while, REITs has been treated as fixed income asset, meaning of the fixed income asset is that it gives you very consistent cash flow. Okay, because 100% of the income from REITs are derived from rental income. Okay, and by right, REITs needs to pay out 90% of their income. Okay, basically they pay out everything, and all the income is from rental. So it's a very consistent cash flow to pay out to the investors, for investors to collect like rental. That is a bit similar to invest in properties. Okay, so the share price of REITs basically collapsed during the COVID period in 2020 because of what? Because they can't rent out their properties, nobody can do business, so there's no income. Okay, so for this particular reason, the REITs share price collapsed. Okay, so why analysts at this moment generally have a positive outlook on the REITs is because at this moment, if you look at the share price, right, or of the big REITs, like we just talked about the big REITs like Sun REITs, IGB REITs, the KLCC REITs. If you just look at all these REITs, right, the share price at the moment is very, very near to the low of 2020 during the COVID. It's very low, but at the same time, if you go back to their earnings, okay, the rental they collect is more or less like pre-COVID level already. Okay, it's more or less like pre-COVID level, but the share price is still very low. Okay, so this particular reason is why the analysts are turning positive onto the REITs. Okay, so it might not give you the return you want right now or in the next 12 months, but it's possible for them to give you the capital gain after the 12 months, because interest rate will not be forever at 4 to 5%. Okay, it will anyhow adjust back to a lower rate. Okay, eventually, probably in 12 to 15 months later, when inflation is no longer there. Okay, so I think this is the reason why analysts are very bullish on the REITs of the outlook like for a longer period.
Okay, So according to your view, how interest rates impacts on the REITs return?
Okay. I think I have just explained this question. Okay. So it's just like I ask you back this question. Okay. Again, will you put your money in the bank with no volatility and a guaranteed 4 to 5%, and at the end of the expiry of your deposit, you get back all your capital plus the 4 to 5%, or will you park your money in the REITs? The return is also 4 to 5%, but I cannot guarantee you that at the end of the 12 months you will get back your capital, probably lesser. Which asset will you park your money? Fixed D or you want the REITs?
I think I will park my money in FD
Yeah,
with a fixed
yeah,
with a fixed interest rate.
yeah, because most of the investors at this moment is thinking the same way. The same way. Cash is king, cash is king. They rather park the money in the bank to earn that very high interest than go out to do investment. Because in generally we say about inflation is like 2 to 3%. So we want to beat that 2 to 3%. We need like 5 to 6% return. So putting money in the bank give you that 5%, but with no risk. And why do you want to risk your money to earn that 5% again when the bank can give you 5% with no risk? Yeah. So I think this is the reason why a lot of people or a lot of smart money, they are not investing now in the REITs. Yeah. Those people that want the cash flow, okay, the fixed income asset, the fixed income one, they prefer to put in the fixed deposit over the REITs.
Okay. So can you also share with us what are the potential rates in Malaysia so that our audience able to add the stocks into their watch list?
Okay. Personally, my top pick will definitely be the big REITs like I mentioned just now, the Sun REITs, the IGB REITs, and the KLCC. Okay. So Sun REITs, 50% of the income basically comes from the mall in Sunway, the Sunway Pyramid. 50% of the rental contribution for Sun REIT is from Sunway Pyramid. And you know how good the occupancy rate of Sunway Pyramid is, like 97, 98%. Okay. The second one is the IGB REITs. Okay. They only have two assets inside IGB, which is the Gardens Mall and the Mid Valley. And you also know how high is the occupancy rate of these two malls. It's about 98% consistently over the past 10 years. Okay. And the last one will be KLCC. So KLCC is a bit complicated. They have both offices and stuff. Okay. But majority of their contribution is still from the KLCC. And KLCC is rented to Petronas as the sole tenants. Okay, so basically they still collect all the money regardless how is the occupancy rate. It's like fixed already. So the return of all these REITs are very, very consistent. The rental collection is very, very consistent with very, very low volatility. You don't see today 90% occupancy rate, next year 85, and then shoot up to 100 again. You always see that 97, 98% occupancy rate. Okay, so due to this very steady occupancy rate, they are able to pay out the dividend very consistently. Okay, so if you ask me, as long as the share price of these three REITs is very, very near to the low of 2020, so my near can refer to 5 to 10%, up to maybe maximum of 15%, as long as it's just within that range, okay, 10% minus plus lah, I think it's very good for investors to really collect them, okay, because like I said, interest rate will not be forever at this 4 to 5%. Bank will not pay you this interest rate forever. Okay, probably after 12 months, you will see interest rates start to reverse already. Okay, because they want the economy to go up again. So they need to reduce the interest rate to make the economy thrive. Okay, so when that happens, REITs, I reckon, those investors that want the fixed income, they will probably put their money back into the REIT sector. Okay, so yeah, you buy now, maybe 12 months later, you will see some capital gain. Okay.
Okay, so if investors out there, you are interested to trade stocks with us and are interested in the REITs market, you can, the potential REIT that William suggested was Sun REIT, IGB REIT, and also KLCC. Okay, so thank you, William, for sharing, and I hope that it will help the new investors out there, and also to our audience who are interested to invest in the stocks market. We are currently doing a promotion where you trade shares now for as low as only 0.08%. So for more details, you actually can drop us a message on our Facebook and we will have our representative to contact you. So we have come to an end for our today's podcast. If you have any questions or if you have any topics you want us to discuss next week, you can message in the comment box below. So thank you for listening to our podcast and happy trading for the week. Thank you for your time too, William.
Thank you. Thank you. See you next time.
Bye bye.
Bye bye.